you know, I kind of left y'all hanging on what CBE really is. In this video, man, y'all in for a treat. So, what CBE really is something that lets you trap opportunity, right? Where you're trapping the same thing every single time to trap the noise so you can be as certain as you can be, right? See, it also lets you capitalize on breaks, pretty much, where it's like, imagine breaking out of that noise, you're able to capitalize base points. Those base points is what will replace your job, you know? And then the expansion lets you get paid in your sleep, you know? So I have one of the very first systems that can work in all markets: Forex, futures, options, stocks, crypto, does not matter, you know? So what's interesting about it is it's also from one trade. Some people ask, are you a scalper? Are you a day trader? Are you a swing trader? This is why anybody, or even an investor, position trader, right? It don't matter what you are, you can lock in with me simply because my system helps and works in all of those different type of turtles and rabbits. So see, it turns from a super scalp, which is like a 1 minute trade, to a scalp, which is like a 1x target, to a day trade, which is like a 2x target, to a swing trade, which is a trade overnight, to a free to a position trade if it's a buy, and if it's a sell, we out in 7 days. Sales go up to max, right? Swings and buys can become positions, you know? Because remember, the market was designed to go up, so you would never be in the sell longer than you would be in the buy. And buys are trades where you can hold them and potentially sell these stocks to your, well, not sell them, but let your children inherit them, you know? Now let's get to the video. And if I was to give y'all a perspective of it, it's like this. If you take 100 shares, right, 100 stocks, 100 contracts in the trade, right, and you sell 50 of those, and you was up $1,000 in profit. Let's always go off $1,000 in profit, right? Boom, you just realized $500. Okay, you got 50 left. You wait till you up 1,000 in profit again. You sell 25. Now you up 1,000 in profit, right? Now you got 25 left. You wait till you up 1,000 again. You sell half. Boom. Now you up 1,500 in profit, and you still got 500 on the table, right? Running, right? Boom. You got 13 contracts. You up 1,000 again. Now you sell another 12. See, well, not 12, you sell another 6 or 7. And now you up another 2,000 in profit now, and you still running $500. Boom. Now you sell another 6, you up 1,000 in profit, right? Which means you up 2,500 now. Cause you done sold out so many times. You done sold out at 50, you done sold out at 25, 13, 6, right? Now you got 3 contracts left. And what you gonna do? You gonna sell again at 1,000, right? You gonna sell 2 at 1,000. You sold 2, those 2 contracts, now you at 3K in profit. Now you got 1 contract left, and you wait till you up 1,000. And you sell that last contract for $1,000. Sell the last contract for $1,000. With the first contract and the first trade you took, you sold 50 contracts for $500. You sold 50 contracts for $500 the first trade. And the last trade, the investment trade, the get paid in your sleep trade, the expansion trade, you sold 1 contract for $1,000. That's what it's like working with me. That's what it's like when we say we could take 1 bullet and kill 26 sharks. Shimon, I'm trying to figure out what's the best angle for y'all. That way or or this way. I don't like holding my phone like this in the video upside down. But then like this, it's like cool because I can pause the video and turn it off on the right side. But welcome to this video, y'all. This video right here, y'all. CBE top down. I decided to move ahead and share with y'all a strategy. And I mentioned before that I'm gonna stop doing the templates, but I have so many of them. And I think it's one of the easiest ways for y'all to learn without me trying to really separate myself, right, from the trading industry or try to be different purposely, just being me, you know? And the templates help me keep steady in what it is that we're going over without getting too excited and without just data dumping y'all out the blue, you know? So what is CBE? And I've been telling y'all, I'm done living in fear. I've been living in fear of, oh, I can't share what my system is. Oh, I can't share what my name brand is. I can't share this, I can't share that because people still like this, right? And technically, I'm not trademarked, but it is what it is, bro. I put my faith in God, but I don't put nothing past nobody. So it's like, it is what it is, though. I'd rather act out of love than act out of fear. And I've been acting out of fear for a little while now. Yeah, I've been acting out of fear for a little while. So I'm gonna share what CBE is, what it really stands for. CBE stands for Cleveland Break Expansion. And when you think about Cleveland, see, it was a point in time where me being from Cleveland, all I really cared about was to just do stuff for my city only. For black people only. But it'd be so funny when there's so many people that have causes just like you that'll help you stick to your integrity with your cause, just like you can help them stick to their integrity with their cause, and they can be Spanish, you know? So they can be from a whole nother part of the world, you know? But it's like, when you look at Cleveland, Cleveland is a chaotic place, right? When you look at Cleveland, you see noise, you see hate, you see shame, you see guilt, you see pride, you see fear, you see desire, you see hustle, bustle, right? You see crab bucket, you gotta win, right? I mean, you gotta lose for me to win type mentality. And that's why y'all hear me always say, I'm a whale and I'm not a shark, because nobody has to lose for me to win. I just click buttons. So that's what the C means. Cleveland, noise. Yo. And then the B is breakout. So when it comes to the breakout, right, you're breaking out of the noise. It might be you taking your first trip. It might be you going to a whole nother city. It might be you going to another district high school. It could be anything, right? But you're breaking out of where you've been for a little while, right? And then we got expansion. Expansion is when you expand much more further than you've ever expanded before. See what I mean? So when you look at expansion, you're pretty much saying, hey, like in the streets, what they say, double up. I ain't no street guy. I ain't trying to be no street guy. I just created all of this in the sense where everybody can understand it, right? Because truth be told, business is way tougher than the streets. But you niggas ain't ready for that conversation, you know? So CBE, Cleveland Break Expansion. Cleveland is basically trapping the noise because everybody focuses on certainty. You can never be 100% certain. And that's why when you can trap the noise, as in the market is going sideways, you're able to trap that. You can now be certain in the uncertainty. Because see, being certain in the uncertainty is when the win rate comes in. But you only have a true win rate when you're doing the same thing every single trade. If you're not doing the same thing every single trade, that's you never have a real win rate or loss rate, because it's not really salvageable. It's not, you can't calculate that, you know? So CBE, confidence break expansion, breaking the noise, trapping the noise, expanding away from the noise until you find new noise. After you expand, you go back into, confidence, trapping the noise, your Cleveland, right? And then you go right back into breaking out of that noise, boom, and then you go right back into expansion. How long do you want to expand is the question. How far are you looking to expand? See, with CBE, we pretty much aim, trying to find the best place because all these angles right here are bad. With CBE, we pretty much aim to just say each breakout is a 1x and each expansion is a 2x, right? So if your candle was 10 wicks, right? Your candle was 10 points. If you had a 10-point candle that broke out, that started your move, it's simple. You simply will aim for 10 points on breakouts. If you are on the expansion and your candle that broke and closed above the level or below a level is 10 points, then now that 10-point move goes back into, well, I want to double up. That means you aiming for 20 points. But see, the way we trade, it's so much I'm gonna get into, we ain't even gonna put it all in this video. Let's just focus on the basic CBE. Cleveland break expansion. I don't really think it's any extra words to say, so maybe I'm gonna just turn this to a yap session in a sense. It's simple. Don't complicate it. This right here is my system. After I do this system video, y'all will start seeing more strategies, But CBE is pretty much where I made everything from. But right now, I just been doing breakout expansions, BBE, So that means I aim for 2 1x targets and then I aim for a 2x target. My average 1x target is a 3x. My average 2x target is a 10x. So it go back into, dang, averagely a day, I'm averaging 12x, 1200%. And now y'all see why. Because see, our greed is we could potentially miss out on this trade because we were so greedy, we wanted it to be perfect. And if it's not picture perfect, if it's not a no-brainer, we probably ain't take that trade, So it's simple, man. Let's get to the templates. CBE top down. Previous candle wicks. Candle highs and lows equals yesterday. Leave clues for today. Candles high and lows yesterday. Leave clues for today. That's deep. I enjoy this template, man. Like, a lot of y'all don't realize how long ago I really made most of these templates. I put so much time and efficiency in making these templates. I haven't touched this one in like 3 months, 5 months, for real. Key levels. So, previous day high, whenever you're unsure about question number 2, check the Heikin-Ashi candles. Number 1, previous day high, previous day low. The previous day high candle will always be on a daily time frame on the very far right. If there's no candles on the right side, that means the candle on the furthest right is the current day high. So you want to go over to the next day. If it's the 26th of June, then you want to go to the 25th of June. And this really the 2nd of July, right? So number 1, where are we going overall? To know where we're going overall, you need to be able to see two last lower highs and one last lower. All right. 2 last lower lows, 1 lower high helps you find a downtrend, right? 2 higher highs and 1 higher low helps you find the uptrend. So in this case, when we look up here, we had a high, we had a low, we had a lower high, a lower low. We're in a downtrend. We only had 3 points. What type of candle is the previous day? This is a full cut. Boom. Now we drop down to the 4 hour. The least amount of time frames and lines you have, the better. Since 1 hour is clear in this example, we don't need 4 hour chart. But mark the high and low always. If 1 and the 4 hour weren't aligned, there would be no expansion trade. We need all time frames to be going the same way to be able to expand that way. Previous day 4 hour high, right? So the previous day high and the 4 hour high are the same for this example. Over here is a real chart. That's a low, that's a high, that's a low, that's a high, right? So are the 1 hour and 4 hour moving the same? Yes, right? What looks clearer? The 1 hour. Number 3, what is the previous candle? This is a doji. You have wicks on both sides and the body is fairly in the middle. Now let's check out the 1 hour. Notice how my 1 hour high acts like a demand zone above the last low. Look left. There will always be signs to enter, right? But when we say look left, we don't need to be on the computer. We don't need to see everything over here. When we say look left, we need to see, all right, this where I'm at. This where I'm at. Let me just backtrack it. Let me trace up. Fix my light real quick. Right? Let me backtrack it. Let me go up. Okay, that's my last high. Where I come from, it's my last low. 1, 2, 3. Boom. You know? Notice how the 1 hour view shows the swings and the details that the 4 hour couldn't for this example. So number 1, where is the trend going, right? Where's trend swing and going down, right? Are the swings getting lower or higher? This is a swing, right? They're getting lower and lower and lower, right? That's 2. What is the previous candle? A up gravestone. The previous hour candle was an up gravestone, which let us know if it's an up gravestone, then this candle is most likely to be saying, yeah, it's probably about to go down more, because that was once 100% bullish candle that closed 20% bullish, 80% bearish. Which means if this 60-minute candle, then that means 40 minutes of this candle was just going up. And then out the blue, last 20 minutes just brought it down. And closed 80% bearish, 20% bullish. It's not about the color of the candle, it's about where the candle closes. So going back to the 4 hour. See how the 4 hour kind of shows we more so in a range, right? But the 1 hour shows that we're actually going down, you know? Find your current range. So if there is a trend on the 15-minute, go down to the next time frame. If it's range, see how clear it is. Meaning, if the 15-minute currently right now is just going up or down, but it's not going sideways, then we go to the next one that is going sideways. So number 1, is there a trend on the 15-minute or sideways, right? We see that it's going sideways. Number 2, does candles close inside master candle? We have multiple. A master candle is something that is controlling more than one candle or just one candle, right? Anything other than itself. Is it the clearest range? We don't know until we go down. Our medium time frames is from 45 minutes all the way to like 5 minutes, 3 minutes. Boom. So now we're on the same thing. If there is a trend on the 5 minute, go down to the next time frame. If it's range, see how clear it is, and if it's inside another range, right? Is there a trend on the 5 minute or sideways? What's going sideways, but it's not the clearest, right? Does candles close inside of it? We have 1, 2, 3, 4, 5, 6, right? But this one didn't. That's what we don't like. Is it inside of the 15 minute? Well, to know if it's inside the 15 minute, we will have to say, let's blow this up, right? Now we see from a real live example, yeah, it's a little under the 15 minute, right? We see we got the 15 minute here, right? This is our 15 minute, but then our 5 minute is here. So it's like a little curl right there, right? And then that means, well, the 5 minute is not the clearest. It's also under the 15 minute, but the 15 minute is very clear. We're probably gonna delete the 5 minute off the charts for this day. Something that I haven't added to all of this is, listen, the 7 minute is really good. And it's really just about painting the picture. Like, let's say, right, we know daily 4 hour, 1 hour is there. Daily there, now we gotta know 4 hour or 1 hour. If they align or which one is clear. Right, then we drop down to the 45 on down. Let's say I got a 30 minute. The 30 minute pairs well with maybe a 15 minute. 15 minute pair well with a 5 and 3 minute, right? Let's say it's like, I don't know, 35 minute candle. 35 minute candle probably pairs well with a 7 minute time frame. You just want to have it math, bro. You just want it to be math, right? What time frame goes into this, right? What increment goes into 35? What increment goes into 30, right? Let's say you got 30. You might say, let me go from the daily to 4 hour to 30 minutes to the 10 minutes to the 2 minute. You know, it's really just about what makes sense for you, right? And that's what kind of makes this more of a system. This kind of something that I use to build bots. It helps me see how people think. It lets me kind of see how people add a little discretion in, right? But then the BBE, keep it one track mind. But then the BBE, that's something that more so, it's the same thing. You marking up the same thing. We took off the hour time frames and we took off all of the medium time frames, and all you have is the daily, 5 minute, and 1 minute. See what I mean? It's the same thing. It's just less stuff to look at and there's less opportunities. If there is a trend on the 3 minute, you should only take scalps, 1x, not even 1 to 2x's. If it's range, see how clear it is, and if it's inside another range, right? Is it, number one, is it the same or is it faster than a 5 minute? It's faster, right? When we go back to the 5 minute, look, it's faster, right? Boom. Does candles close inside the master candle? Yes, right? Perfectly. Nothing closed outside like the 5 minute. Is it inside the 5 minute or the 15 minute? When we blow this back up and we see, okay, let's look. Look at that. The blue area here, this is our 3 minute. And this area here is our 15 minute, and this gold area is the 5 minute. So yeah, it's actually inside all ranges, right? Boom. So now that let us know we can drop down to the next one, right? And we see, okay, the problem is everybody goes into a day risking 1%, 4 years into their career, and wonder why they can't get 6-figure payouts or trades. We always go into the day willing to lose only 1%. It's a difference of leveraging over 1% versus losing 1%. And when you hear people say don't risk over 1%, that's usually them saying don't leverage over 1%. And they don't even want to lose 1%. They probably want to lose 0.25%. And they ain't even aiming for nothing. It's cool to risk 0.25 if you got something high that you risking, right? Like if you got $1, you want to risk 25 cents, but you aiming for 10 more quarters, then that's raw, you know? So the filter is, if we win on confidence trade and breakout trade, we can risk up to 3% on props and 10% on live accounts, right? You want to have up to 100 bullets in live accounts. You want to have up to 10 bullets in prop accounts. If we win one and lose the other, we only risk 1% on the expansion trade. If we lose one trade and we win the other, then we're not risking over 1%. We're not leveraging over 1%. If we lose both breakout and the confidence, there is no expansion. If we lose 2 trades in a row, we're not taking a third. If we lose one of the other first 2 trades, we'll take a third. If we win both of the first 2 trades, we're going to take some of those base points from earlier in the video and we'll add it to this trade that will pay us in our sleep. On the 50K account, 1% is 500 for confidence trades. We mentally or physically only use 5% of 1% of the total account. $50 risk is 5% of $500, because confidence is just a test to see, can we expand off of this time frame, right? Because when we get into our expansion, we'll jump to the 3-minute. And if we see that on the 3-minute, the 3-minute is giving us double ups, and that means, boom, we can drop down to the 3-minute and we can step away. And this 3-minute can get us to the 1 hour, the 1 hour can get us to the daily. And if it's a buy, we can hold it forever. If it's a sell, we hold it for 7 to 8 days. Orbs. So 5-minute high and low. First things first in the orb, you marking up the first 30-minute increment, right? So it has to start at 9 o'clock or 9:30, 8 o'clock, 8:30, 7 o'clock, 7:30, not 7:45, not 7:05, none of that, right? And pretty much you marking up the first 5-minute candle. The first 5-minute candle has 5 single 1-minute candles, meaning it's different, right? This candle is 9 o'clock, 9:01, 9:02, 9:03, 9:04. That's the first 5-minute candle. The first 5-minute candle does not close at 9:35. The 0, the 30-minute increment, is a candle. So let candle play out. We only care about candles on key levels. Let candles touch and close, enter as close to the levels as possible, right? We simply just want to mark up our 5-minute high. And I can admit, this is wrong. This is in the wrong place. We simply letting these 5 candles print. We're marking up the low, we're marking up the high. That's it. When we look at that, now we're saying, okay, we want candles to come back down, right? We will not even come back down. We want a candle to break and close above our 5-minute high. When we hit how that candle break and close above, we want to enter on that candle retesting the key level, right? Boom. It went up, 3-minute trade. Our risk is 1, and we have 1, 2, 2.5. We risk 1 bullet to hit 2 sharks and a half. So did we get a higher day or lower day? We got a higher day. Retest back to key level. Perfect, right? High or low, forming wicks, which means we probably gonna get some action like this. If you leverage more than 1%, get out here, 60 to 80%. If you risk over 1% on a breakout trade, get out at 60 to 80% of what you risk. Boom. Now we see that's our first breakout for the higher day. Right? That's the break kind of out of the confidence setup, right? And now we're going to get that retest back down. We want to see, wait, hold up. If we consolidate and we know we only go sideways at the top of a downtrend and at the bottom of at the top of an uptrend, at the bottom of a downtrend, that means we must be reversing. Maybe we're going to come back down, retest this 5-minute high, go back up. We got a higher day. We had a retest back down to the key level. We're not here for gaps or trends right now. And now we have high and lows forming at the wicks, right? So now, this is just a clear example of not looking at the 1 minute. Because there's two ways to go about it. You can say, cool, I'm just going to wait for 2 5-minute candles to close, or I'm about to look at 1 minute candles. The easy thing is, let 1 5-minute candle close, mark up the high and low. Let the next 1 minute candle close. If you want to take the breakout, get out at the 1x. That's for the base points. That's to add into your expansion trade. If you don't want to take a breakout, let the next 5-minute candle close above or below a 5-minute level, right? 5-minute levels. Boom. And when after you had that 5-minute candle close above or below, now for the expansion trade, we will be looking at the 1 minute charts for 1 minute candles to come retest our old 5-minute high, which is now a floor. Boom. So when we look at risk, on the left side here is old risk, on the right side here is new risk. And when we look at that, we see, okay, well, this is the entire candle, right? Our stop loss will always be the bottom or top of the candle that closed through our levels. Since we're going up, our stop loss would be if we came back down and closed under. We want to make double of these right here, right? If this is a 10-point candle, then that means we aiming for 20 points for expansions. But remember, we're not going to enter all the way up here. We're going to enter down here. So now on the right side, this is the new risk because we want to enter on key levels. We don't want to just enter because it's going up. And this is where we could potentially miss out on trades. But if we don't, let's do some well math. If this on the left side is the 1x of the 5-minute candle, and you know we want to double up, and that means we're risking 1 bullet to hit 1 shark, 2 shark, 3 shark, 4 shark, 5 shark, 6 shark, 0.4 plus 0.4, 0.8. We're risking 1 bullet to hit 6.8 sharks. I like my shark right there. Yeah. That's crazy. That's one trade. Risking 1 bullet to hit 6.8 sharks. Because if we know this left side, that's 1, right? That's going all the way up. And then this one is the next one. So this first box down here is the risk. That's 1x, 100%, 100% of risk, 100% of risk, 100% of risk. But these up here are not 100% of risk. It's 40% of risk. So that means it's 0.4 profit. And we have so many more templates on that. Right here, 1 minute candle, high, 1 minute candle, low, boom, we out. At this point, we already scaled out anything that's over 1% of the total account, right? So now we leaving at max $500 on a 50K account running in profits, right? We let price come down, retest, right? But we're not buying in again here. You can, but you don't have to. But the whole point is we need the 1 minute low 1 minute time frames to be disrespected. Why? Because we can't trust a 1 minute time frame to get us to 1 hour time frames. That's what CBE is. If the 1 minute time frame gets you to the 1 hour time frame, you most likely never stepped away from the chart. Because how could you step away from a chart if it's 1 minute candles? That's why you hear me say, we don't trade the 1 minute, we enter on the 1 minute. We can read the 1 minute. I have so many reps with sticking on the 1 minute, so I do. But 9 times out of 10, I don't have to. And 9 times out of 10, I'm probably not going to do that when I start trading live. So, did we get the medium time frame alignment, or is the lower time frame still running? If the 1 minute is still running, we're going to stay. If the medium time aligned, then we might be able to walk away. Did we scale out at higher day or lower day? We already said that. Did we scale in again, which is down here, or did we just hold on for dear life? But we need this 3 minute time frame, which was our current range for CBE, right? Confidence breakout expansion. For our confidence setup, which was giving those expansions, we need that time frame to create the highest point that the day went. And that's when we can step away. Did we switch to Hikinashi? Did we switch to Hikinashi? Because at this point, we didn't already hit target 1 for the first breakout. If you took that for base points, we hit target 2 for the breakout above the 5 minute, So now, breakout for the 5 minute, right? And now we looking for target 2 here. With this being target 2, target 2 is that expansion, But within that expansion, we got out again a higher day. Why? Because if we scaled in down here, I'm scaling back in 3% just to sell 2% again right here, which goes back into the first 50 contracts, you made $500. But the last 1 contract you sold, you made $1,000. Let's get to the charts. Notes needed. Key levels and external trend lines slice the market up where it is the most volume. Our higher time frame levels will always be omnipresent in any market. Current range helps with the middle frame that will get us to the 1 hour structure. Orbs are used for intraday trades to trade to these. Oh, I'm so nervous. I'm not even nervous, just going fast. Orbs are used as intraday trades to these external levels. So if this is a daily 4 hour or 1 hour, daily 4 hour, 1 hour, then these levels in the middle are the orbs. Boom. Right? Boom. Right? So we scalping to these levels, and then we doing day trades. Right? Then we're doing day trades to the next ones. So 1 minute to the 5 minute super scalp. 5 minute to the 1 hour is more like a day trade, like a scalp, right? 1 hour to daily 4 hour, that's more of a day trade. 4 hour to daily, that's usually a swing trade. And then daily to the higher day, all-time high, that's an investment. Daily to last weekly swing for a sell, that's more of a sell, right? Just little stuff like that. Now let's get to the charts. Let's go deep. So when we look at this, number one, is download your template. Download your CBE journal. This is a journal that I made. This is my very first journal. It has everything that I said in here, like everything, right? So Number one, mark up previous day high, mark up 4 hour, mark up 1 hour. Let's do that real quick. Boom, so we out here, right? We could delete all the chart. Let's go on silver. Let's do some silver, right? Cool, we on silver. First things first, we mark up the previous day, right? Marking up the previous day, we want to see overall, where are we going, 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 where are we going. This is a lower high, this is a lower low, this is a lower low. So we see overall we're going down. Now we want to mark up the previous day high, previous day low. That previous day high and low candle seems to be like a doji. Let me zoom in for y'all. Boom, that's a doji, right? Wicks on both sides, close where it opened at, pretty much, but it's green. So we know it's a bullish doji, right? Boom. Now, we drop down to the 4 hour. On the 4 hour, same thing, we want to find trace back, trace back, trace back, trace back, right? Right here, that's our last low, right? Right here is a high. So if that's our high, and this a low, and this a higher high, boom, that's all we need to see that we going up. And now we're gonna mark up 4 hour high. Ah, snap, I deleted that off. 4 hour high, boom, 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 right? Then we gonna mark off 4 hour low. Boom, 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 right? Then we're gonna go to the 1 hour, see if we're still going the same way. How do we know? Start back. Boom, we looking for the last low. Look at this, that's a low. From that low, we had this high. From that high, we had this higher high. Boom, so we pretty much going the same way. All time frames align. Which one is cleaner? The 4 hour is cleaner than the 1 hour. The 4 hour is cleaner than the 1 hour, right? 1 hour shows a little more candles, but the 4 hour shows the clearer structure, right? But we still know we want to mark up the previous 1 hour high, previous 1 hour low, right? Boom, so previous 1 hour high, low. Previous 1 hour high is the same as the previous day high. So these be the least lines, the better, right? You don't have to mark up, mark up, mark up, mark up. The least lines, the better. You painting the picture, right? Boom, now we got that. We drop it down to Hikanashi. We're on the 15 minute. 15 minute, we looking for a current range. And right here, we ain't here to cheat it. Oh, look at that. That was our current range right there. But we had one candle break out. Now this is the entry candle to get in. So now let's look at our range now, because we're looking for a range that's happening right now. Not nothing that happened 15 minutes ago. We need it to be happening right now. Boom. 5 minute is in good range, right? So we take the 15 minute off. Boom. Now that we got that, simple. Now we looking to see on this 5 minute time frame, can we get an expansion? That's it. We looking to see, can we get an expansion? On this 5 minute time frame, that's a 2x going down, up. This is a 2x going down. Boom. Right? And now this is where we head down to the 1 minute. Let me make sure. Boom, that's it. We do that 5 times. We just do that 5 times. We're not even looking to enter or none of that. We just do that 5 times. Let's say if this is the build up. The build up, it looks something like this, right? We see on this time frame, 5 minute build us up here, boom. And now our orb is like somewhere like right here, right? Our orb would be like right here or something. This is what the orb would look like. But we're not focused on all of that. The orb is to trade through the levels. Like, we understand that, right? So this was a good video. It was a great video. I enjoyed this, did it pretty fast. But you know what? We're gonna do it 5 times like in the example. Because I don't like to cheat myself. If that's what's there, that's what's there. Y'all seeing me do it, maybe it'll change y'all integrity and y'all doing it, you know? So boom, same thing. Now we on Euro USD. First thing we do, we want to see what time frame, right? Are we going up or down, up or down, up or down? How we know we going up or down? We just need to see the last swings, right? So we see, okay, this was our last low or high. That's our low. Boom. There's a lower low. So we're going down. Let me look at my previous day candle. Boom, that looks more like a doji. I mean, it looks more like a gravestone, normal body looking candle. Boom. Previous day high. Previous day low. Right? Now we drop down to the 4 hour. 4 hour. We want to see what's happening. How we read the structure. Find last low since it look like we're going up. Boom. Find high from there. These are all equal highs right here. Equal high. Equal high. Equal high. So we know this is an important level. Boom, right here, there goes the higher high. We have 2 highs, 1 low, right? And we just want to mark up the previous 4 hour high and low, right? And this time, I didn't save that last one, which I could have did, but it's all good. Should have, could have, we don't say that. Could, would, should, right? Boom. So now, we can drop down to the 1 hour. On the 1 hour, same thing. Zoom in, zoom in, zoom in. We want to find the last swings to see where we're going. So this is our last low. This is our last high. And this is our last high. So we see we're going up on the 4 hour, on the 1 hour too. Which one is clear? I would say the 1 hour is clear because it's interacting with that previous 4 hour level, right? The 4 hour isn't as clear because we only have that one candle for this example. Just like the last one, the 4 hour was better. Boom, we marking up previous 1 hour high, previous 1 hour low, right? And since it's so close, this is where you might see people that try to make their charts look super cool. This is where you hear people say trading is not just perfect levels, they're zones, right? And we just make that area a zone, right? Or really still, like for me, I like to take the cleanest, the most, where you're gonna go, what's the worst that can happen. So I take the lowest one. Boom, that's it. Throw the 15 minute on there, right? Boom, now we on there. Look at this, 15 minute, that's the hour. 15 minute, we don't have any range, but we are inside this last range here. We still are in a really deep range, but we don't like that. Let's see if we can find a range in a range. Boom, look at that. Boom. We have a 5 minute inside of a 15 minute, and we have a 3 minute inside of a 5 minute. Perfect. And that's it. From there, we see, okay, the 15 minute is super rangy. 5 minute is good. 3 minute is inside the 5 minute. Then we're going to take the 3 minute. But we also know dang, the higher time frame was going up, and right now the market going down. So these are the type of trades which is that discernment that how you say maybe I should walk away or wait for something more like this. But this is what made me create other type of strategies, is that this one kind of leaves so much. I'm sure y'all can see it now. It really leave a lot of how you feel or what you think, you know, versus just fixed. Same thing. Boom. Now we back to it. It's the third markup. Simply saying, okay, let me see what I'm looking at. I want to see, am I going up or down, Let me do y'all one further. Y'all look for all of these and don't realize the color change. How do I know if I'm in the uptrend? Holy shit, there's a red candle. So that was a downtrend. There goes the last high. And boom, I'm in the uptrend. I ain't even have to come and mark this up all the way down here, right? Mark this up here. I don't even gotta look back that far. For what? Boom, wanna mark up previous day high and low is more of like a normal body. Cool, right? Now we drop down to the 4 hour. On the 4 hour, what is it saying? The 4 hour, it looks like it's going up, but let's really see. How do we know? Trace. Holy snap. There goes a pullback. There goes a high. There goes a higher high. Boom, we're going up on the 4 hour. Now we just mark up previous 4 hour high, previous 4 hour low. Boom. Now we drop down to the 1 hour. That candle right there is like a gravestone, right? Let me delete this off. Boom. Now we saying same thing. How do I know if I'm going up or down? Boom. Back trace. Holy snap. There go a high. There go a low. There go a high. Boom. There go another high. Right? So we know we're going up. Boom. Now we see, okay. Now I can mark up my 1 hour high. I can mark up my 1 hour low, but it go right back to that same thing. If we see the 1 hour high and the 1 hour low are like the same levels, then we're not going to focus on the perfection. We're going to focus on it hitting the zone. That's what they say. But we going to focus on it hitting the best level, strongest level possible. Right? Drop down to the 15 minute, same thing. Are we in current range? How do you see the range? You need to see a candle close inside of a previous candle. Perfect. Let's see the 5 minute. 5 minute, not that clear. Let's see the 3 minute. 3 minute, not that clear. But it is one here. Right? And boom, that's it. Now we simply want to say, okay, if I'm going off the 3 minute, we didn't mark up the last one because it was shitty. Right? Boom. This is my 2x. And we expanded on the 15 minute on this trade. Maybe we can have a retest in there somewhere just because we like how that look. You see how it's like more discretion, right? Like this whole range is the thing, but maybe we can have a retest in here. Right? Bring this up. Boom. But now it's like our stop loss is really inside. Our stop loss is really the 15 minutes or whatever, but we can make it tighter and tighter and tighter and tighter. It's so many different ways to go about this strategy. That's why this strategy has created over 40 different systems. Right? I think that's the third one. Let's do 2 more. Let's do some Tesla, right? Tesla, boom. We marking up. We simply see, how do we want to know if we're going up or down? Oh, we have to count from the back, right? So boom, on this side, we see it's going down, but let's see where it came from. Right here, it had a low. Right here, it had like a double Dutch high, right? Now boom, right here, it made a higher high. So overall, we're going up. Drop down to the 5 minute. Wait, go back. Mark up that candle. That previous day high and low was a doji, which changed the whole scenario. Doji 50-50, and we're below a previous day low. But let's just see what's happening, right? Daily don't really change nothing, not much. It doesn't change the trade. It just helps with the swing trade more so. Boom, same thing. Well, where are we going? Boom. How do I mark up and see what trend I'm in? Let me backtrack. Oh snap, they're going low. Right there, right? Let's delete this off real quick. Oh snap, they're going low right there. Oh snap, they're going high with rejection right there. Oh snap, it made a higher high right there. Cool, uptrend. That's all you need to see. That's literally all you need to see. Then you can look back here right now and be like, well, how do I know if I'm not in the downtrend right now? Well, because you're more so in the uptrend on the 4 hour than the downtrend, simply because this side right here, even though it rejected, you can count this as a lower high, right? You could count this as a lower low, right? And you can count this as a lower low, right? But at the same time, it's kind of like, it's best to draw it. Candle don't move like that. You need it to move like this. High, low, lower high, lower low, right? Cool. So we can take that one too. Right, so we can take that one too. Just more of like a decent reversal. Boom. Back to the 4 hour. Gotta mark up previous 4 hour high, previous 4 hour low. Boom. Boom. Now we're on the 1 hour. 1 hour, same thing. 1 hour high, 1 hour low. Right? But we want to see what trend are we in. How do we find that? We have to backtrack. Boom. We see, okay, we have a low, we have a high here, right? See, okay, we got a high here, boom. We got a low here, boom. We got a lower high here. So yeah, we actually are in a downtrend. On the daily, it's not the clearest. On the 4 hour and 1 hour, it's pretty clear. Why are we okay with saying this is the downtrend? Because the last leg of the 4 hour candle is showing that it's moving down on the 1 hour. It's 4 1 hour candles that go into 1 hour candle, right? 4 1 hour candles that go into 1 4 hour candle, right? So boom, we see, okay, if that last leg is moving, it pretty much represents something like this for us. Let's say this is just the last leg. The last leg is that one. That's the 4 hour, but then it's the 1 hour. That's what we like to see, right? Boom. So now we can drop down to the 15M on the 15 minute. Same thing. Go to the dojis. We want to find our current range. If it is one, boom, candle close inside of another. And this is why y'all going over these so much. In the first videos, go back to Hikanashi, go over this drill, right? Because the whole point of this YouTube thing is in learning, teaching, paying somebody for something is not their time. Even if y'all are using y'all time right now to do this, you have to put more time into your trading than me, than anybody that you're learning from. So the only time you learn can't just be these videos. It has to be, if I said to do 10, I'm not trading, like you're not trading because I want you to trade, you trading because you want to trade. So if I said do 10, you should do 100. That's just me though. That's me. Feel me? Boom. So now we back on that same thing. And we simply just marking up again. Right? We want to double up. We want to see if we can expand off of this time frame. The cleanest time frame that we know, right, is that, oh, and this one was messy, my bad, y'all. That one's right here. So the cleanest time frame that we kind of see is really like this 15-minute and 3-minute, and we pair both of them, right? So for this one, it's kind of seeing like how we pair them both. It's like, this is what I say discretion, how you place your stop loss. Your stop loss could be at the top of the 3-minute, right? I make the 3-minute blue. The stop loss could be at the top of the 3-minute, or it could be at the top of the 1 hour. I mean, at the top of the 15-minute range. So that's the discretion, how aggressive you want to be. The aggression is the trade is wrong because you're just on the wrong side of the trade, right? Okay, so the filtration is the trend is wrong. If you bought but the market is going up, then you're wrong. Number two is the trade being wrong. If you bought or you sold but you were just in early, it didn't necessarily go the opposite way, but it didn't react at the time that you thought it was. That's the trade being wrong or right. And then momentum, that's off of, momentum is the most aggressive. That's like momentum being right, like volume being right, like tug of war is over, All right, boom, we do one more. Let's do Russian roulette. Let's do Microsoft strategy. Boom, boom, boom. We back on the daily with it. We want to see, are we in an uptrend or a downtrend? How do we find out? We simply want to find backtrack. Oh snap, they're going low. Oh snap, they're going high. Oh snap, they're going higher high. We're going up. Right? We want to mark up the previous high. Boom, boom. We want to mark up the previous low. Boom, boom. This on the daily time frame still, right? Now we drop down to the 4 hour. 4 hour is 4 hour high, right? 4 hour low. 4 hour low is the same as that daily low, right? So that's where we see it's more of a zone. But then we want to backtrack and see, are we going up or down? Boom, 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 boom. Oh snap, they're going low. Oh snap, that's the high it came from. Oh snap, that's the same higher high. Oh, we're going up on the 4 hour too. And the daily going up. That's smooth. Now we on the 1 hour, boom, boom, boom. The 1 hour got the daily and the 4 hour high and low. So we out. We ain't even focused on the 1 hour low. We don't need it for what? It's already in the same zone. But we do need to see, are we going up or down? Backtrack. Oh snap, they're going range, right? Oh snap, they're going high that range came from. Oh snap, they're going that same high again. We going up. Now we can drop down to the 15-minute. 15-minute. Look at this. This is not a clear range, right? Boom, so we take it off. 5-minute, we missed that range. That range already happened. It happened back here. And even that wasn't a clear range. 3-minute, we see a range forming. Perfect. We had every example. We had an example when we couldn't really mark up. We had an example when we couldn't find. We had an example we couldn't mark up. We had examples when we could expand and everything. And now this is an example of when, if the 3-minute is arranging, we ain't really looking to double up. We just drop down to the 1 minute, man, and we just gonna look for 1x targets. We ain't looking for nothing much. Simple. We looking for 1x targets now. Why? Because we're not expanding. But what if this is your only stream of income, right? So if this your only stream of income, you'll still get paid, but you probably just won't be able to make as much as you would have. But you still got to pay your confidence. You got to pay your skill, Boom. And that's it. I enjoyed this video. I think I'm gonna make it a little faster. I'm gonna see how I'm gonna go about it. But this was a great video, man. Remember, put more time than somebody else. The first 5 videos is out the way. All of this that I'm dropping now is extra stuff with the same thing over and over. We're gonna keep it and make it boring, and even more boring, and even more predictable. Let's keep it going. Let's keep the videos going. Drop, like, a comment, follow, subscribe. Follow me on Instagram at Kaizen Key. I'll be dropping this template in the description below. And make sure you're on the charts more than you are not on the charts. What I mean by that is, you only need to be on the charts 90 minutes a day, right? And that's learning and trading. Right? When you're learning the same thing, you don't have to put that much time into it. Just stick to learning that same thing. Don't, oh, I got it, now let me learn something new. Let me add that in the bag. It's not about adding shit in the bag. It's about taking it out of it. That's why when I make the next strategy video, BBE, you will see it's just a daily 5-minute and 1 minute, because I took stuff away. I took opportunities away. I took decision making away, you know? So, y'all lock in, man. Y'all let me know what y'all think about this video. Drop some comments, drop some thoughts, right? And let's print, man. Shmoom.